Hello and welcome to yet another edition of Who Moved the Market. I'm Surabhi Upadhyay. Now, you would have seen the headlines already. It has been a good run for the bulls over the past 5 to 6 weeks. The result is that most of our key indices are either already at their all-time highs or are approaching these all-time highs. For instance, the Bank Nifty is already sort of reached there. The mid-cap index is within kissing distance of that mark. And the Nifty is not too far away, just about 1 to 2% away from all-time highs after a long period of consolidation. So it's an important time to keep technicals in mind, while of course everybody has to go around and do their own homework, look at fundamental research. Good idea to always know what technicals are saying in the market with respect to levels, with respect to risk appetite and things like that. So to help us make sense of the technical picture on the market, today I have on the show with me Shrikant Chouhan, who is from Kotak Securities. Shrikant, thank you very much for joining in. Shrikant, of course, is a very well-known name. You always see him on TV. And today he joins us on this special show. So Shrikant, first of all, welcome to our digital special offering, Who Moved the Market?
Thank you, Surabhi, and very thank you for calling me on this show.
Okay, so Shrikant, you probably heard me sort of set up the show with the opening remarks. I think this is that time where a lot of people start paying attention because we're at all-time highs. It's human tendency, right? And therefore, the first key question is, what have you made of the last 4-5 weeks in which the market has managed to scale or is almost at these all-time high peaks? How is the health of the market? What have you made of the rally?
Well, for market, I think the health of the market is really strong. It is really, in fact, getting good. Uh, if we go through with the last 4-5 weeks pattern of the market and the way there are like flows from the FIIs, I think markets are going to do well. But yes, at the same time, markets are like very much cautious. The greed is completely missing, and maybe that's the reason we are seeing gradual upward activity in the market. But eventually the markets are finding good amount of support whenever there is a correction in the market. So one thing is very clear, that there is like buying which is happening in the market on a frequent basis, and the retailers, or maybe I can say even the investors, those who want to invest with a view of at least next 6 to 12 months, they are getting into the market whenever there is a correction.
Okay, all right. So, a buy on dips, that's what's played out. So straight away, let's start with the Nifty now, Shrikant. I mean, 18,887. We are not yet there, not exactly touching that mark, but we are, hardly any distance away from it. So what would your advice be? As and when the Nifty approaches these levels, should one be booking profit? Or do you think that this is a bigger breakout, which has more legs and steam? So you should, if you're in the market, simply ride it higher?
See, I think, Nifty, if we go through with the, based on the valuations, I think the markets are quite like, I can say it's reasonably valued. If we compare the market's valuation with the 2025 earnings, then it is very close to 18 multiples. And whenever the markets are like starts trading around 18 multiples, it becomes more and more cautious. Until the markets are not crossing its previous high, we see some cautious sort of activity in the market. So at these levels, I would say that the markets are good, but they are cautious, and the strategy should be to look for buying on dips. I think 17,800, 18,000 is certainly going to act as very good support for the market, because if we go through with the averages like 50 days, 100 days, 200 days, all are placed at same level. So if we see any corrections will be from here, I think 18,000 is going to act as very good support for the market, and it's again a very good opportunity for investors who have missed the rally, current rally. But on the higher side, again, 18,600, 18,800 is going to act as resistance. And if you go through with the chart of September, October 2021, I'm to say, if we go through with the chart of 1.5 year back, then around these levels, most of the time, the Nifty found good amount of profit taking pressure. This time it is missing, but we need to see that whether the markets breaks 19,000 or not. The euphoria will come only if it breaks 19,000. Till then, I think the markets are going to remain in a range.
Okay, so let's watch for that 19,000 mark and see if the bulls have enough momentum and enough charge to sort of power through it. But while we're talking about the Nifty, Shrikant, what's interesting is that banks have had a lot of momentum in the last 2-3 months, right? They've been supported by, largely speaking, very good results as well in the fourth quarter. And the Bank Nifty has already hit its fresh all-time high. So what is your advice when it comes to either the Bank Nifty, those who are, trading in the index, or more importantly, bank stocks? Can you still buy bank stocks despite the run-up?
Yeah, see, like for Bank Nifty, it is very simple that we have to always track the FIs flows, and if FIs are positive, we always see good amount of activity in almost all the bank stocks. It contributes 35-40% to the index, and this time also the Bank Nifty has broken its previous high. In fact, it is trading above its previous high of 44,000, which is positive. Based on the overall structure of the market and the way there is like fundamental flows on the capex side and all, I think this particular sector is certainly going to attract a lot of funds or maybe buying at every decline. This time we are expecting Bank Nifty to move towards 45,500, and on the downside, 43,000 or maybe 43,500 is going to act as very good support. So now the support has shifted from 40,000 to 43,000, 43,500, and in case if there is any correction, then we should be buyer on dips. But even at these levels also, if there is a view of 3 to 6 months, certainly we should be buyer in frontline banks as well as in mid-sized banks.
Do you have any favorites? Any names where the patterns and the trends look particularly strong?
See, Surabhi, this time number of stocks are really doing well, and they are forming some very strong patterns.
In terms of
Based on
banks, I
that,
mean, I was talking more from the bank's point of view. Then we'll talk about the rest of the market. But since you were
absolutely
discussing Bank Nifty, yeah.
correct. Like bank stocks, I mean to say almost all the stocks from the bank sector, they are doing really well. Actually, we need to keep a top-down approach, but because we are very close to crucial levels, I think here we need to be little bit more and more choosy. So State Bank looks good, which is currently trading around 580, 590. We also like HDFC Bank, which is currently around some 1650, 1670 levels.
Okay.
Canara Bank looks good from the PSU Bank space along with State Bank. And we also like ICICI Bank. So these are the stocks on which we are bullish.
Okay. All right. So you have a thumbs up on the banking part of the market. Let me ask you about some of the other bigger trends. And right now we're still discussing large cap stocks. Autos have had a good run, right? Last couple of weeks. In fact, this year itself, a lot of the frontline auto names, your Tata Motors, M&M, a lot of the two-wheeler makers, most of these auto stocks have done really well. So what's your thought here? Should one look at buying fresh, or is it too late now? On the other hand, there's the IT sector. If there's the one major laggard in the market so far in this year, 2023, it's IT. So what are the patterns indicating there? Is there a bottoming out happening? Is there any point being a contrarian and buying these IT stocks, or just stay away?
See, for auto sector, again, it is doing really well. And whenever like we see in the past, a track record of 20 years or 25 years, auto stocks always or auto index always performs better than the Nifty or index whenever there is a start of the rally. And this time also in the month of July 2022, we saw the Bank Nifty, auto index was crossing its previous high. Currently also it is trading comfortably above the same. But because the extended rally, we may see some correction. Also, we need to face the important event of El Nino. So based on that, we are expecting some correction. But broadly, we are bullish on the auto sector, and we are of the view that even at these levels, or if there is any correction, we should be buyer in good I mean to say in four-wheeler companies.
Four-wheeler companies. So which ones? I mean, are you hinting at Maruti, Tata Motors? Which four-wheeler companies?
Yeah, in that we like Tata Motors
Okay.
as well as Mahindra.
Mahindra and Mahindra. Got that. IT? Any thoughts around the correction we've seen?
Just like a lot of people, they are talking about IT and they are like more want to know about what is happening in this sector. See, currently, it is under a lot of news flow, and all these news flows are external. This time, I think after the numbers, again, the view of fund managers as well as investors, they are like a little bit cautious and they want to see the next results. But based on their patterns, based on their technical formation, I think they have corrected to their extreme levels.
Okay.
And because they have corrected to the extreme levels, I think we should be buyer at these levels. Based on technicals also, they are very close to their long-term supports. Like TCS is available at 3100, Infosys is available at 1200, Tech Mahindra is at its levels of 1000, which is like the support of last 6-7 months. So broadly, we are of the view that if there is a view of 12 months, at least like 6 to 12 months, then we should be buyer in IT companies and keep buying. Because see, some few months back, FMCG was completely down and The street was completely worried about all the FMCG companies because crude was quoting at some $99, $95. But now all these FMCG stocks are again started trading at their highs, and in fact, FMCG index is also trading at its all-time highs. So similar sort of activity we can expect in IT companies, but yes, we need some patience to buy and sit for a longer time.
Okay, got that. So, perhaps turn a buyer in IT, FMCG has also been looking good. But the interesting thing, Shrikant, is that a lot of these indices that you're speaking of, including the Nifty, are practically at their all-time highs. Reliance is actually still 12-13% away from its high. So it's an interesting rally where Reliance has not really played much of a part. What do you make of this, and what's your call on the stock?
Yeah, so my observation or my experience always tells me that Reliance participates whenever there is euphoric sort of rally in the market. We are still not to that level of euphoria in the market. And if we see the market is crossing, let's say 19,000 or 18,900, which was its previous high, then we can expect a good amount of activity in Reliance. Otherwise, I think it is the most huge weighted company in the index, and because the index at its crucial levels, we are seeing some profit taking or some sideways sort of activity in the Reliance. But otherwise, we are bullish on the stock. We are of the view that if there is any correction, we should be buyer. We are expecting stock to move towards 2650 or 2700 levels. So it will take time, but if there is any correction, we should be buyer in Reliance.
Okay, very interesting. We've been discussing so many large cap stocks, Shrikant, and you seem to have a positive view in most of these names. Okay, let me ask you the reverse question then. On large caps, anything where you're not convinced, where you would, perhaps be a clear avoid or maybe even a clear sell, so that our viewers know that basically that's an area where you would not go in this rally?
I think, see, except IT and except metals, all the indices are really doing well. And if there is a view of next 3 to 6 months, I mean to say, if there is a view of next shorter to medium term view, then we should not participate in metals and in IT companies because there are like other sectors which are really doing well. And in that, if you like buy and at supports or on dips, we can make very good money on the short term capital investments or even with a medium term view. So it is better to stay away from metals and IT for the time.
Okay, all right, got that. So that's the large cap theme. Now let's come to the really interesting part of the market, Shrikant, and that's the mid caps, right? Look at what's happening. I mean, on a daily basis, there are newer names which come up and stocks are flying 20, 30, 40%. Mid cap index is also at its lifetime high, all-time high. What do you make of this trend, and how does it compare to the previous cycles where mid caps get to these high levels? Do you see euphoria? Do you see any excesses? Or do you think that this has been a healthy mid cap run?
Yeah, I would say it's a healthy mid cap run because if you just go through with the past few years, like from 2010 to 2019, all these mid cap stocks, they failed to perform. And in fact, a lot of people, they lost huge money in the mid cap and small cap companies. But this time, after 2020, after this COVID period, the picture has completely changed, and there are like buyers. The companies are really doing well. Their numbers are quite healthy. They have moved to extreme levels. Like from here, even if there is a correction, then also they are not going to see their previous lows. And this time, when the market was completely cautious, we saw good amount of inflows for all these mid cap companies. And there are like number of companies which are which are really good in terms of quality, in terms of growth, in terms of their overall performance of last 6 to 12 months. I think because of that, it is attracting a lot of funds. And mid-cap IT, mid-cap 50 stocks or mid-cap 50 index, it's trading at its all-time high. From here also, if we go through with the technicals, purely based on the technicals, we are expecting some 20 to 25% sort of returns from current levels. So that means we can expect some 30-40% sort of returns from stocks. So there also we should be more and more selective, but yes, we should be buyer in this company.
Okay, so select and choosy for mid caps. That's how it always is, and that's the tough part, right? Is to get the right mid cap. So, I mean, purely from your research, anything interesting on the charts, do share any names that you may have come up with. And also a word on this absolutely insane railway rally. Right, we've all known what's happened to an RVNL and IRFC, a lot of these railway stocks. What do you make of it? And do you think it's getting a little risky now? Or are you still convinced about many of these railway names?
Yeah, so I think, see, this time we are seeing activity in capital goods and engineering or infra stocks. But in that, all these railway related or defense related stocks are really doing well and they are crossing their immediate highs. The volumes are exceptional. The delivery based volumes are also, if we go through with the past 6 to 12 months, then they are consistently increasing. And the price performance is also like quite sustainable. In that, we like RVNL, which is currently trading around some 120, 130. In the previous month, we saw a good amount of rally because of some specific news flow on the fundamental side. But if we compare the trend of Siemens as well as ABB and RVNL, I think RVNL is definitely going to do well along with rights. So yes, there are like number of stocks which are going to do well, but we need to focus on this particular area. I'm going to say defense as well as railways to buy if there is any correction.
Okay, and I think you also like HAL since we're talking defense, PSUs and defense. HAL is also a stock you like?
Yeah, absolutely. From the defense space, we like HL, and it is, even after this OFS, the stock moved up, and today it has broken its previous high. So, based on the overall formation, I think it is heading for the levels of it is into like a trending up wave. So, the next level could be somewhere close to 3,500 or maybe 4,000. And on the downside from current levels, if there is any correction, I think 2,700, 2,800 is going to support the stock. So broadly, we are bullish on the overall space.
Okay, so final thoughts. You've given us lots of ideas, Shrikant. So let me ask you to sum it all up. Let's say if you had 100 rupees extra to invest and you could choose, 3-4 key stocks to deploy that money, for the next at least 6 to 12 months of a time horizon, which would be your top 3 picks?
Okay, so based on technicals, based on fundamentals, because we always keep some basis of fundamentals to trade or invest in the market, or whenever like we recommend to our clients. In that, we like Tata Motors. The stock is currently quoting at some 520, 530. It is very close to its all-time highest level. And even if we go through with its pattern of last 1.5 year, then it was like a bullish consolidation sort of pattern. And on the dismissal of that, we are expecting technically its stock to move towards 700 or 750. So Tata Motors certainly looks a very strong bet at these levels to buy. Yes, fundamentally it is very close to its fair value. But if there is a correction or if there is any breakout, I think then something will come which will actually help the stock to move higher. The other stock which we like is DLF, and there also it has broken almost 5 years of highest levels, and it's a rounding bottom sort of formation. So based on the formation, we are expecting stock to move towards some 600 or 650. So there also we are bullish, and again, the way yesterday we saw good amount of rally along with huge volumes, and it's a breakaway gap. So if there is any correction, certainly it will be an opportunity to buy. But on the high side, we are expecting stock to move towards 600 sort of levels. Okay. And finally, the third stock, if I have to choose from this particular space, then I think State Bank is the stock to buy for because it is still fundamentally cheap. It is very close to its median levels. From here, the stock can move to the levels of 700. So in these 3 stocks, we should be buying.
All right. Okay. Thank you, Shrikant. Lots of ideas there, and I'm sure that our viewers can get some of those ideas going, do their own research, and then look out for their portfolios. Thank you for joining in. Really appreciate you taking out the time and for joining us on Who Moved the Market today. Well, with that, we're out of time, so we have to take your leave, but do keep it with us. We'll see you tomorrow with yet another theme.